Good morning. Hope you can hear me. And welcome everyone. I'm really excited to be here today and to have this conversation on this very exciting topic, AI's competitive edge and how we're leveraging that to shape the future of financial products. Let's start with some introductions. I'll begin with myself. I'm Natasha Kyprianidou, as you can see. I work at Alvarez & Marsal, which is a top-tier consulting company. I'm based in the London office in the digital financial services practice. But enough about myself. Let's meet our esteemed panelists. So if you could each take it in turns just to introduce yourselves and say a couple of things about what you do.
Hi, I'll start. Nice to meet everyone. I'm Frankie Woodhead. I'm the Group Chief Product Officer at the Bank of London. I spent around 16 years so far in financial services, starting my career at Barclays Bank for 10 years during a very interesting period in 2008 until 2018. I then spent 5.5 years at a cloud-native core banking platform vendor, so 10x Banking, that has presence here in London, in Australia and clients in South Africa. And then I joined the Bank of London on the 1st of November last year. The Bank of London is a payments and clearing bank. We provide direct payments access to financial institutions here in the UK, and we have ambitions to have banks across Europe and the US over the coming years. Lovely to meet you all.
Thank you. And I'm Michael Onifantakis. I'm currently finishing up my role as Chief Architect and Head of Product for Capital One here in the UK. Kind of this is my last week. In my background, I've worked in both kind of fintech and innovation within large banks, and a lot of work in digital transformation. And I've spent the last couple of months effectively fully immersing myself into Gen AI. I've done this amazing course by the MIT and fully understood what is actually about to happen to all of us. So I've drank from the MIT fire hose the Gen AI Kool-Aid, but I'm really excited to talk about some of these things and where we might go next with all of you.
Good morning. I'm JP Fabry. I'm based out of Malta. I'm an economist by profession. I spent 5 years as the personal economist to the former Prime Minister of Malta. I then did international advisory, where I advised 9 governments of small states in the Caribbean and in the Pacific on economic diversification. Today, I run my own advisory company, which is both economic and financial services. And I'm also a co-founder of MyUbuntu, which is a parametric insurance company in Africa. We've been selected by Lloyd's Lab as one of the most innovative insurtech companies, and we're also building a payments and soft wallet application in Africa to connect Africans together with the diaspora in Europe and outside Europe.
Good morning, everyone. I'm Gerald Chappell. I'm the CEO and founder of Abound. We're a UK-based consumer credit technology company. We use AI and bank transaction data to do cash flow underwriting, to provide a very different approach to unsecured credit decisioning. We came into the market about 4 years ago. Our view is traditional credit scoring is incredibly noisy and results in a lot of people being unfairly excluded from the lowest price deals. And so our approach allows you to say yes more often and to give much lower interest rate offers to customers. We've proven it pretty well so far. So we've done about £500 million of origination and lending, and our book performs at about a 70% lower loss rate than the rest of the market, like for like, adjusted for risk. So the approach and the technology really works, and we're ramping and scaling that up now. My background before that, I used to be a partner at McKinsey, so I was a competitor to Natasha here. And I was their global head of digital lending and global head of credit analytics. So have spent a lot of time working with large banks and financial services companies globally on improving and enhancing their lending businesses.
Fantastic. Thank you, everyone. So now we can delve into our questions. So we know that AI is a lot more than generative AI. The previous presentation from Matthias was quite informative. Helps us see how we can drive advancements across predictive analytics, automation, decision-making, and many more areas. So today we want to explore a lot more than just the hype that we've come to see. And so the first question is, if you could each share one AI megatrend that you have seen in real-world applications.
So
Whoever wants to go first, if you could each take it in turns.
very happy to start. So the obvious one from my perspective is bringing AI into credit decisioning in a proper way. So credit decisioning historically, particularly in the consumer space, has been based on kind of simple logistic regression models. Pretty much haven't moved a long way since the end of the 80s or beginning of the 90s, when you had the kind of construction of Experian scores, FICO scores, etc. And essentially what those models do is they take an accumulation of historic credit facilities that an individual has had and use the repayment behavior and the limits on those to determine what is the likelihood that this person will pay back a future loan or credit facility. That kind of works in sort of separating your prime customers from your kind of subprime customers, but actually is incredibly noisy and doesn't have access to a lot of really interesting information. It doesn't even know what someone earns, what they spend, what their affordability looks like, trends in their financial behavior, etc. And so as a result, it is a very kind of narrow lens to look at someone's ability to repay a loan and their willingness to do so. A lot of people end up being unfairly excluded from good quality deals from that because perhaps they don't have the longest credit history, perhaps they've moved countries, and they've got discontinuities. Perhaps they've had problems in the past, but are now in a much stronger financial position, and so on and so forth. So the big trend that we've been driving is saying, actually, there's a lot more information that can give you really detailed insight into someone's financial situation that's just not being used. And the biggest area of that is bank transaction data, because if you have access to bank transaction data, you don't have to ask a customer and trust them when they say how much they earn and what their expenses are across a wide range of categories. You know that information because you can see it hitting their bank accounts, and you can also see what they're spending money on. That seems incredibly obvious, and it's sort of strange that the whole industry isn't using that. But the reality is that data is very noisy as well, and so extracting the kind of signal from the noise behind it is really, really, really tricky. And I guess that's where we've been using AI quite actively in being able to understand and synthesize that information and turn it into kind of usable, working, and fair credit decisions.
Yeah, I taking a bit a note from what was said. I think there's a interlocking experience, right, with AI, which ultimately falls on two main areas. The first is that the possibility of having dynamic risk management, right? So you're processing all the amount of information to actually embed your risk management, your processes, to actually ensure that everything is dynamic. And then that will also drive into personalization of consumer services. So you can marry the two really well with very quick loan approval processes, credit ratings, micro-insurance, and all of that. So they're basically two sides of the same coin. The fact that you can embed risk management, make it at the core of your operation, and on that build customer personalization.
I'm going to spoil this a bit and talk about the hype. More because I think a lot of the hype around Gen AI, a bit like what Matthias was saying, right, has been generated because actually a lot of people have realized that the point that ChatGPT was launched less than 2 years ago was a true inflection moment in AI, where we've moved from kind of narrow AI that has been there for the last 10, 12 years and has got lots of successes already to actually much more general use of AI to enhance productivity. I mean, you kind of need to think about this as, the closest thing for all of us here, I think, is probably thinking about it as the point that Apple announced the iPhone back in 2007, whilst we already had internet, we already had mobile phones, we already had smartphones, but it wasn't going very far, very fast, right? Until we had the iPhone, right? And that completely changed the way that people were using that technology and how accessible that was in everybody's hand, right? And you could see how that has completely changed the way that we now all do business. So it's a bit like we are in 2009, right? So if I ask you guys to tell me who in here in 2009 actually had an iPhone, how many people had an iPhone in 2009? Okay, how many people have actually used ChatGPT? Yeah, you already can see how much quicker this new wave is exploding, right? Actually, ChatGPT and those types of technologies, Gemini now is in everybody's Google inbox if you've paid for a subscription, are already so much more available, and they're also becoming more and more powerful very, very quickly, right? We're talking about significant improvements on those models every 6 months, and a huge amount of competition between money being thrown in it because of those improvements. So there is a huge impact on productivity, and I think talking about use cases, it's interesting that even like less than 2 years after this technology became effectively available to the general public, we already have significant use cases, especially in productivity improvements for developers. I think you've seen some of the demo from Matthias around using this to help engineers. Most banks, a lot of them are already using GitHub Copilot to help their engineers, mainly with more basic tasks, some of the more mundane tasks that engineers have to do. But the reality is that a lot of us are seeing significant efficiency and productivity savings. We're already seeing 15-20% of time saved by engineers. That in itself is huge, right? If you think about companies, big banks that have got 20,000 engineers, talking about a 20% productivity improvement, we're talking about thousands of people that we don't need to hire and more work that we can do already. And this is just with the previous version of technology we're getting these improvements effectively with Copilot supported by GPT-4. And if you look at the difference between GPT-4 or GPT-4o and O1 that's just been announced 2 weeks, we're talking about those scoring in Codeforces from 10%, which effectively is an entry-level graduate engineer that you've just hired, to scoring 90%, which is one of your most senior engineers in your company. So in 6 months, these models have matured from a graduate level engineering skill to somebody that have 15 years of engineering experience, and it will keep going. So in reality, I think that productivity to me is where the big opportunity is.
So for me, I think, as we've already heard, and from Matthias earlier, the actual use cases are so broad. For me, this AI is more like an infrastructure capability that's just been enabled. In the same way, there was lots of skepticism around cloud 10 years ago, and banks were looking, it doesn't work for this, it doesn't work for that, so they just really didn't invest. I spent a lot of time trying to understand that from inside a bank, and hence joining a fintech that I saw starting that journey. For me, AI is the equivalent kind of next evolution. It's not necessarily find a use case and fix the problem. It's how can this fundamentally change every single part of the business? How will it be applied internally to engineering productivity? How can it support treasury activities and understanding cash flow or payment collateral or loss rates? How can it support customer servicing? We've already seen examples in the market of people claiming significant benefits on customer servicing times, expectations, and efficiency rates ultimately. So for me, I think you definitely need to be experimenting. In the same way, talking about AI in PowerPoints gets you nowhere. You have to, as an organization, start to learn, start to iterate, start to understand how it could be utilized and build the internal muscle to utilize it. So from my perspective, starting with the lower risk use cases where you know that you're not exposing yourself to material risks is how we've approached it. But it isn't something you can just sit and look at the theory. You have to understand the models, understand the different use cases that you could apply to, and ultimately get your hands dirty. As said, I think the initial use cases for us are customer servicing. We've built a code assistant that allows our clients to build code snippets, and it inputs all of the right API information directly from our specs. That's always updating every time we make releases to the platform. And again, we've seen engineer time from our clients reduced by 80% overnight. They're not available on standard models because the models are static, so they actually don't get trained on public data. So we augment the underlying model with our own data, and that's worked quite well for us. But for me, it's not a use case by use case. It's how can I apply this new infrastructure to fundamentally change the business that we're operating within.
Thank you. Fantastic insights by everyone. So as a follow-on question and getting a bit more specific, so generative finance is promising things like operational efficiencies, enhanced customer experience, but the impact can be far greater than that. In fact, AI, and to Frankie's point earlier, it can transform the entire financial services value chain. And so if you can each give some examples across the different stages of the financial services value chain where you've seen some real use cases. And maybe if we can start with Frankie.
Yeah, let me further build on, like I said, where we've looked to utilize it and kind of our roadmap going forward. So it was really interesting. So last December we met as a product and engineering leadership team, and it was kind of sharing the plans for the year ahead, going deep on kind of client feedback to date, and like the standard kind of annual planning. One of the engineers came in and actually had built a prototype as part of his demo. So he'd built a chat interface that allowed clients to ask questions about products, ask questions about onboarding. We onboard fairly complex clients, so this is fairly high risk businesses that serve multiple jurisdictions where they are financial institutions themselves, so the risk, compliance, financial crime dimensions are quite significant. And in turn, that means that the onboarding process is complex but necessary. What we have found is there's a varying degree of capabilities in some of these organizations, but a way in which clients can understand your process before it starts, ask questions during the process at any time of day, because we do serve global clients, was in 48 hours, one of the engineers built a prototype that was working, that we'd augmented with our own data and presented it to the leadership team. And that was like my wow moment, if I'm honest. I was kind of Q4 last year, so coming up to a year ago, kind of seeing a little bit of the hype. I'd started using ChatGPT in a personal capacity, but I hadn't really seen it utilized in an engineering type organization. And that was my moment where I thought, wow, this is, engineers are excited by it because of the benefits it can bring, but the speed and pace that you can make progress is quite significant. And for me, that's a key difference to the cloud. There was still significant barriers to entry in the cloud at the time. You had to get an account, you had to go through security. It was fairly immature in its understanding. The cloud's well understood now, and because generally all of the models are available as managed services, again, you've not had to go through the internal challenge that you may have had before. So for me, we started with the Code Assistant. We got that live from the prototype to production in about 8 weeks. We subsequently rolled it out to the website, so that now understands all of our products and services. We're just about to deploy an internal use case whereby clients have to submit all of their financial crime policies. They have to submit examples of their KYC and KYB information, and to date that's had individuals cross-checking against our own policies, digging into the information, and the tool will now scan all of the information that's been provided, cross-reference to our policy, identify where there's discrepancies between what clients have said to us versus what we expect, and we're using it to augment the process at the moment. It's not going to auto-reject or auto-feedback, but what it will do is cut down the time taken from about 5 working days of elapsed time to 1 hour. We've already seen it in real life. So I think for me, we're going stage by stage, started with publicly available information, started then with products and pricing, which gets more regulatory focus, and now we're going kind of the next level, which is financial crime and onboarding of complex financial institutions, and really looking to enhance the client experience, make the lives of colleagues much easier, and ultimately become more efficient, which means we can scale in the volume of clients we can onboard without needing to add people. I think this is very prevalent. Klarna is either doing a great job at comms around their IPO, or they really have have managed to crack the use of AI to bring down their cost base. So for me, cost of banking is infrastructure, people, and regulatory capital, and I think we've already seen it applied to 2 of the 3 dimensions. I'm intrigued to see how it gets applied to the 3rd in the coming years ahead.
Yeah, no, that's really good examples, Frank, and I'll build on one of those things that you said, because I think everything that you said, absolutely right, but I think we can take it a step further. I think the reality is that we need to realize that Gen AI is more of a general purpose technology. That means that it can actually help increase the productivity of almost anyone that actually works in a bank. And it's definitely, all of the things that you said, but you can even see how people in the marketing department, in the HR department, in the finance department, in every department could start to use Gen AI to help them improve the productivity. And I think people are still thinking about Gen AI they're imagining this fully automated agent, which indeed isn't there yet. The technology has a few more years, not a lot of years, right? We're not talking about decades, but a few more years to get to being fully autonomous. But its ability to help everybody become much more productive and take time out and is already there. And I think that is the way we need to be looking at Gen AI. It's similar, again, I've been using this analogy a lot because I realize that it's a bit like end-user technology UCs, a bit like an Excel spreadsheet. When you first give an Excel and people start to go, oh my God, I have something on my PC that I can now use to actually do things that my IT system used to do, because it can actually do lots of operations, access database, all of those things that we started to use back in the late 90s as EUCs are now the same thing on steroids, is effectively what you can get from Gen AI, because you don't even need to know Visual Basic. You don't even need to be trained as much as you need to when you actually were using Excel. All you need is English, right? All you need is English is the new programming language, is what people say, because all you need to do is structure your query, structure your prompt, and you can get something that is extremely useful. So I think the more and more we see that becoming accepted as a general purpose technology that all of the employees of banks or any company would use to help them increase the productivity, we will see huge gains in that kind of a human capital part of any organization, which is actually a huge part of the cost of the organizations.
Yeah, and I think if we take this approach of a general purpose technology and an enabling infrastructure, if we superimpose a whole value chain in financial services, we're already seeing very tangible, real case solutions. So be it from client onboarding and how one can really look into complex structures, UBOs, sanctions screening, and all of that. Also from a regulatory perspective, regulatory streamlining, if you're in line with all the regulatory changes that are happening. So RegTech is becoming a very important element in terms of making sure your compliance is in place, but also reducing or improving the customer experience in terms of regulatory requirements. Chatbots and how can you support customer interaction, but then you also have your predictive insights which can help you from a product development perspective, especially if we're looking at, for example, the African case of financial inclusion. How can we leapfrog products and services through the use of mobile technology, right? So the data is there. It's about building the right models to get the right insights, and then to also personalize your products according to the behavioral patterns of your consumers. And ultimately, you have an automated process, right? So from loan approvals to credit ratings, which is dynamic, which is real time, which is as well, if you're looking at the whole, for example, payments infrastructure, then the ongoing monitoring of it all. So transaction monitoring and how AI models can help you detect fraud prevention, and also in reporting suspicious transactions, because as we know, AML rules are only getting stricter, more stringent. So that is why financial institutions and not only, but all regulated entities need this firepower, this general purpose technology to support them in all these elements, which ultimately can cost them their own license.
I'll give two examples from our business. One, our kind of general decisioning technology that we do, but secondly, then an example of using generative AI to rapidly iterate new capabilities, which I think picks up on a lot of the themes here. So from a general perspective, we use AI to basically go through and process large volumes of bank account transaction data to understand our customers' financial circumstances. So your average customer probably has 2 bank accounts, generally like a traditional bank account, like a NatWest account, and then a digital bank account, like a Starling account or Revolut account or something like that. Some customers can have up to 15 of these things. And so to begin with, we kind of net those things together in a kind of consolidation type process. We then go through and do classification of all of those transactions. So, is this a line of core income? Is this grocery expenditure? Is this commuting expenditure? Is this rent, etc.? Some of those things are much easier than others. Some things like rent, for example, are very difficult to classify from data because the descriptions on the transactions never say rent. And the amounts can be quite variable, particularly when you're in house sharing situations and so on. So there's a lot of complexity that you have to go through there. From that, you can then start to get a kind of core view of someone's true affordability. So what's their core income, their core expenses, their existing financial commitments, their discretionary spending, etc. And we like to call that their kind of structural affordability. But you can also start to pull out a lot of other really interesting features as well. So we extract something like 50,000 behavioral features from that classified transaction data, which are, can be very simple things like, what is the income someone has. They can be quite dynamic things like what is the velocity with which they spend their disposable income after all of their core bills are paid off. It can be things about interconnection with others, so the level of family support. It can indicate things like vulnerability. Do you see, compulsive financial behaviors like gambling or day trading and this sort of thing? And so you can really expand the kind of net of this. And so we pull about 50,000 of these features out. The average customer probably has 3,000 or 4,000 lines of bank transaction data that we process. That then goes into our models, and from that, and those are more traditional kind of machine learning models that then take all of those features, and then we use that to predict likelihood of default and a series of other metrics that you need to do from a lending perspective. So that core technology that we put together, we refine continuously. And we do that through kind of automated decisioning, but we also put a proportion of all of our cases through manual underwriting as well. And we use the kind of expert judgment feedback to kind of go back and reinforce the models so we can make them better and better over time. And that approach has allowed us to significantly outperform the kind of the legacy bank market, if you like. I mentioned before the statistics. We get a 70% reduction in defaults, on like-for-like cases compared to the market. So the approach really gives you that extra insight. So that's sort of our core decisioning platform. But picking up on this sort of infrastructure capability point of view, we're constantly sort of adding new features and new capabilities. So to give you an example of one in the self-employed space. So self-employed customers are really messy compared to an employed customer. Someone who's employed might have a salary coming in. It's £4,500 every month. It's coming from the same source. Pretty easy to work out that's someone's income. A self-employed customer like a builder, they will have 15 different payments from different sources in a given month, and those sources will change month on month. They will be buying large amounts of supplies. They might be employing other people and running this sort of mini business all through their personal account. And it's very, very messy and quite difficult for the traditional classifiers to pick up. Our underwriters are spending a lot of time on those kind of cases. And so our decision science team said, well, what can we do that would be useful to kind of get more context around these cases? And so the idea there basically was to go through and said, okay, can we do a combination of social media and Google searches, pull a whole bunch of unstructured data about this person in the business, and synthesize that in a way that the underwriter knows, actually this person is a hairdresser, they run a salon, the salon is based in Bristol, the profile of customers looks like XYZ and so on, and then can we convert that into features that can either allow us to automate these cases, or if we can't fully automate them, really really accelerate the underwriting process around them. So instead of taking 2 days, it can take 1 hour. And so I think it took us 4 weeks to get the first version of that into production. As an apology to Matthias, we didn't use Gemini for that. I think that we used ChatGPT APIs. But I think that sort of shows that the kind of a massive improvement that you can get really, really rapidly in the business. And so for us, self-employed is about 15% of customers, and we got a massive efficiency improvement through using that approach. And that's just one example of many.
Thank you so much, everyone. Really diverse and interesting perspectives. So this next part of our conversation, we'll have more focused questions for each of our panelists, and I'll start with you, Frankie. So you've launched Toggle, an AI assistant at the Bank of London. From your experience, how does conversational AI, how can that be used within banking as a service and to improve API integrations for businesses?
Yeah, I think as I mentioned earlier, we spent about 2 months doing the first iteration. We are able to see every question, so we review on a weekly basis to see questions and responses. We're constantly refining the model and working really closely with clients and engineers to understand where it works well, where it doesn't. To be honest, it's gone really well. Where it's a black and white case of integrating to an API, AI seems to work particularly well. I think the key difference I've seen, so in my latter years at Barclays, I worked in the corporate bank looking after lending, and I can relate to a lot of the points, because one of the key interesting points we saw was as Deliveroo was starting to roll out around the country, we saw quite interesting default rates. So to give you an example, there was a particular town in Essex, and we actually banked Deliveroo at the time. They were a Barclays customer, so they let us know where they were going next. And what we found was, from one data point, we could improve our default rate predictions by 80%, and that data point was their TripAdvisor rating. So what we found was Deliveroo goes into a town, the 4- and 5-star places grew revenue by 50%, and anything with a TripAdvisor review less than 3 fell off a cliff, because all it did was open the market completely. And I think the difference for me between machine learning is constrained by the data that is available. At the time, I think we had 50 columns. The model could only deal with 50 columns. If we added a 51st, it was a year's worth of work and £20 million, as I'm sure everyone can empathise in large organisations. So we were kind of constrained by this 50-column model. Now what generative AI has enabled is the model is so rich with information. We don't have to do machine learning on Java or on C++, on Python. It has like a base amount of knowledge that it just knows. And for me, the big thing we've definitely chosen is we will not become like a model building organization. I think a bank, and I'm sure there'll be, we're not a bank, we're a technology company, so we're not a bank, we're an AI company. And if I hear that, I'll cringe, because I think there generally needs to be a really big focus. There are going to be people that are exceptional at building models, and I don't think banks will be. I think banks should look to utilize the models, own the application layer, own the customer experience, which is exactly our strategy that we're looking to apply. The reason why I shared the Deliveroo example is because some information that we were constrained by the data, and I don't think that constraint exists anymore, but we will be constrained by the quality of the prompt, by the quality of the understanding. So I think helping the organization understand how it can be applied, where the hallucination risk does exist, and choosing where that hallucination risk is applied is going to be really, really important. I think, as said, the 2 use cases we've applied so far are relatively low risk. Product information is standardized. It's fairly, there's not a lot of subjectivity to it. APIs, again, they're very clear and descriptive. REST helps with that. So for me, as we start to go into the areas that are slightly more subjective by design, complaints handling, vulnerable customers, clearly you can look to make that as data-driven as you can, but there's always a softer kind of emotional dimension to it, which I think how AI develops into that type of space is going to be interesting. I sit as a non-exec advisor for an e-learning company, and we're talking about things in the context of financial services today, but imagine sitting back in that industry. There's people that author learning modules, there's people that have to read them. It's fascinating the amount of opportunity in that space. So we're talking about sector level applications, but for me this is going to go through every sector and completely transform it. So very exciting to be a part of it.
Thank you. So Gerald, I'm coming to you next. So credit risk is an area that's also undergoing great advancement, and especially in accelerating the speed of lending. At Abound, how are you using AI and technology such as intelligent workflow orchestration in order to transform the customer lending journey?
I think speed is a pretty critical thing in the journey, but for me it's not the most important thing. I think the most important thing is the quality of the decision. Speed, to some extent, is becoming a hygiene factor. At the moment, I think something like 70% of our customers are paid out on the same day, which we think is pretty good from a speed perspective. But the thing we take more pride in is being able to give better quality offers to people than the competition and offer them lower interest rates because we understand them better. I think if you look, so you take kind of digital lending or lending as a whole and look over the last sort of 10, 15 years, the big digital innovations to begin with were saying, well, can I scrap the paper application form and can I put it online? So big win in terms of reducing friction, but you still ended up with like 50 questions in the application. Then it's, well, how can I make that journey as smooth as possible? A lot of that was just better product design, but then you're starting to see use of AI on our side. We don't have to ask customers 20 questions about their income and expenses because we just know it, because we take the bank transaction data and it takes them somewhere between 20 to 40 seconds to link their bank accounts and for us to ingest that data. So that's a big kind of customer experience benefit. And so we like those things because obviously it reduces friction, it makes acquisition costs lower for us, customers really like it. But we think the thing that really makes a difference is the quality of the decisioning based on the insight we're able to get from the transaction data, using the approaches that I talked about before.
Thank you so much. JP, I'm coming to you next. And financial inclusion is an area that we shouldn't neglect in this. And I know you have a lot of experience in that space. So how are you using AI in order to provide personalized insurance and other financial products to underserved populations?
I mean, we're working in the parametric insurance space, where basically it's all about climate risk, weather, and selecting the right parameters to protect farmers, right? So in our case, it's more about ensuring that these underprivileged or these farmers with no access to insurance can actually access and have a security just in case a weather trigger just ruins the crop and then ruins their livelihood as well, right? So the way we work is very much based on geotagging farms, building the models of the crops, looking at past weather data to try and predict weather events in particular regions, and then AI comes in much more on the predictive and the risk-based pricing model, right? Because for our clients, pricing is key. Just to give you a bit of perspective, only 1% of farmers have insurance in Africa, and we're talking of a 220 million population of smallholder farmers, right? So the technology is there, but there are a lot of barriers relating to trust, access to the financial system and all of that. So in our case, what we take for granted in the West is a far from true reality in sub-Saharan Africa. So we're building profiles of farmers, want to build the credit ratings of farmers. So, and then once they're on the platform, once they can access insurance, they can also access the broader realm of financial services, and then that will lead us to micro loans as well, right? So I believe that once we give smallholder farmers the access to financial services, be it insurance, to protect them from the risks that they face, because ultimately they are the least contributors to climate change, but they are the biggest cohort of people impacted by weather events. But and then if we can give them access to financial services, primarily microloans, we can then start looking at a whole transformation of the whole agricultural sector, because in reality there was no economy that developed without a strong agricultural sector. So I think from our case, it is how do we use this general purpose technology in a responsible way to trigger much more broader societal benefits to these people and to these communities.
Thank you so much. And last but certainly not least, Michael, and the important topic of ethical and regulatory considerations. So in your view, what are the challenges that financial institutions are facing when they adopt AI, and how can they put in practice these ethical practices?
Yeah, no, that's a good question, Natasha. And I think in a way, this is probably the biggest challenge of all companies, and even more big companies that are regulated and heavily regulated, right? There is a huge amount of concern, some of it actually because of myth and some of it because it's real, on how individual employees, if we're talking about everybody having access to GenAI, how they would use that technology and how that might or might not expose customer data, company IP to these third-party services. There are two elements, I think. Some of these are more easy to solve, and I think kind of we're already hearing examples from Google and others that actually we can start to guarantee that this myth that people have in their minds, which is, oh, if I give some information to this model, it will learn from it. You know, those types of things we can actually easily address. Also, you can probably easily stop things like personal information being shared and put filters on that actually doesn't allow employees to share anything like PII data, human-sensitive data. You know, we're blocking things like keys, security keys being shared through Copilot. All of those things are concerns around data security and data privacy that I think are actual concerns that need to be addressed. But there is a even greater concern that I think a lot of companies, and especially financial services, has, which is more the ethical and consumer duty aspects of how people would use these technologies. If you think about the example of EUCs, a lot of the problems that banks had with EUCs was that individual departments, individual people started to do things in their Excel spreadsheets that might have been breaking some of the compliance rules that actually the banks had, because they were making lending decisions that maybe were not fully compliant, or a variety of decisions that you couldn't monitor or control. And I think that is the biggest concern, which is how do I make sure that every person using these services is using them in a way to support them, but in a way that actually doesn't lead them to break any financial regulation. It doesn't lead them to breach consumer duty concerns, especially when the leadership of the bank has got senior manager responsibilities that actually mean that if they were to allow people to use these services and they were to break the law, they are endangering themselves and could go into jail, right? So I think that challenge is a huge one and really needs to be solved in order to be able to unleash that kind of productivity gain that we're talking about.
Thank you so much. I'm conscious of the time, so I think we should allow some questions from the audience.
Hi, Dharmesh Mistry. It's great that you're all excited about AI, and I'm very excited too, but inevitably this is going to be a loss of jobs, no?
Who wants to take that one?
Provocative.
I mean, I'll take it because, Ganesh, I mean, you are absolutely, it is true, right? And actually, if you really think about and project this into the future, and if you really think about what is actually happening, you can definitely see a significant amount of work that people do becoming redundant, right? Either because they can become extremely more efficient, and instead of needing 10 engineers, you need 2 with GenAI doing the work of 10, or even fully automating some aspects when these things mature. And I think, I agree with you, I think this is a huge challenge for society. I mean, you hear people like Mustafa Suleyman. If anyone wants to read a book, read The Coming Wave. He is talking about that kind of need to try and contain this in a way that actually slows it down. And I think it's more about the slowing it down that needs to happen in order for society to be able to adopt. Because in general, we know that every time this happened in the past, whether this was the Industrial Revolution, whether this was the Digital Revolution, jobs have changed, people have adapted, we have become much more efficient in doing things. We're doing other things rather than the mundane things that we used to do, and generally society flourishes. I think the real trouble here and the real challenge is how quickly this would happen and whether we as a society can actually respond to this. And I think that's something that we need to face into. But at the same time, if you ignore it, if you kind of go, no, I'm not going to use this to help me because it's going to take my job one day, in reality you will be left behind and your job will be taken and you won't have a job. Whereas if you use it and you go, it will make my job easier and actually maybe I'm not going to work as hard anymore, then you can live a better life and work less and still be as productive, right? So that's the way I see it. But it is a worry. It is a worry.
Yeah, I think from my perspective, if I look at the FTSE 100 or the S&P 500, there's been an obsession on cost for 10 years. If you look at the West Coast or the most successful private equity or VC-backed firms, it's always about top-line growth. So for me, I'm really hopeful that what it does create is capacity to invest, to grow the top line and to understand how you can grow revenue, grow value, not just see it as a means in which to flatline revenue and reduce cost base, because working in businesses like that, of which I've worked in some, it's not that exciting for individuals. So I think most people want to understand how they can enable the business to grow, enable their clients to do better with them if you're in B2B. So for me, as there always is, there's always, all of us will have to evolve. All of colleagues will have to evolve to the new world. Though that will mean individuals will be impacted, but is there just going to be a systemic reduction in jobs globally or in the sector? I don't think there will. I just think the jobs will be focused on innovation, ideation, and things that can ultimately support the top line. That's certainly my hope.
I'll go here first and then come back.
So I was going to ask Gerald a question or talk to Gerald's point first, but I just wanted to add my point about what you've been saying so far. So I think with AI, first of all, not to lose sight, it's going to add value, and it's not, in my view, so much about making people redundant, but I think it's displacement, and it's going to be more enriching in terms of jobs. But let's not forget, we're an aging population globally, and we're not reproducing as much in the West as certain other parts of the world are. But nevertheless, if we don't use technology, we're going to come up with a shortage in resource anyway. So I think technology has to be part of the solution in the future. But I very much like what Gerald's talking about, the credit scoring insurance, because the company I work for, it's a plumbing and heating distributor. It's quite a large company in North America, and we did have a business in the UK at the time. The number one issue we had among our 1 million customers during the pandemic was access to liquidity. And a lot of our customers are entrepreneurs, sort of like what we'll call the white man kind of thing, where they work for themselves. Their order books were brimming to full because people wanted to redo the bathrooms and so on and so forth. But they couldn't access liquidity because the banks weren't prepared to lend to them because they're unknown entities. So it's interesting that you say that solution is a really interesting thought, and I'd like to perhaps talk offline with you about that. But I definitely think that's a good example of how AI has helped and will help with business going forward.
Right. I'm going to actually ask if we can have that question asked in person so that we can all go for a quick tea and coffee break. But please, can we get a warm round of applause for our panel?